Hey, today we are going to learn all about credit scores and what does it take to get your score past that legendary number 800. Stick around, you're about to learn everything about credit scores. Hey everybody, I'm Mr. Maciek. This channel is all about teaching you how to increase your credit score, how to invest, what are the best ways to invest if you just have $1,000 or $100,000. If you like this channel, please click subscribe below, click on that notification bell, and also if this video is of value, click the like button, please. I'd be glad to answer any comments personally, so drop a note if you have any questions about this. So let's get started about credit scores. So first and foremost, we need to understand, how is the credit score calculated? What percentage is allocated to what activity that you do? 35%, over 1/3 of it, is allocated to your payment history. As you can tell, it's extremely important, and we'll dive deep into the payment history and what can we do to help fix some things if you might have some discrepancies or some errors or just maybe some late payment histories. Next one is 30% for the amount that you owe on certain credit lines. So we'll dive deep into that one as well. Next is 15% on the length of your credit history. After that, 10% is all about the new credit that you have. And the last 10% is what types of credit are you using. Diversification is the key here. Now, before I get started about breaking everything down, you may ask yourself, I'm not buying a house. I don't need any great credit. I'm not buying a car. My car is just fine and paid for. Well, you may be right, but not really, right? Because we need credit when we don't think we need credit. So what I'm trying to say is, when you don't think you need credit is when life happens and you need to use credit for something. So it's important to just upkeep your credit score, because any time that you want to go get a loan for something, for example, you want to go get a new credit card, that's a loan, right? Next time you want to go get an auto loan, and maybe when you want to buy a house, or maybe you want to help your child or your parent or your cousin or someone co-sign on any kind of loan, your credit score greatly impacts how much you're going to pay for that loan. So it's not about if you're going to qualify for a loan, although when it's really low, that is true. But what are you going to pay? Are you going to pay that low interest rates that's advertised on their banners? Or are you going to pay the higher interest rate because you got a 640, 630, 620? It's really not that difficult to get your score up above 700 if you just follow a few principles. One last thing I just want to mention is that when your credit score starts going down, you don't realize it, but your car insurance goes up. They have statistical data that shows that people with low credit scores have a higher risk of getting into accidents, and therefore their premiums go up. So do you drive a car? That's reason enough for you to go have a low credit score. And the last important factor that I just want to talk about briefly is that even though you have good credit, if something happens and your credit score goes down drastically, what credit card companies tend to do is cut you off. So now, not only did your credit score go down because of some particular situation in your life, but also the credit card companies say, whoa, you're now a higher risk. Instead of that $10,000 amount we have given you, we're going to go down to 4. I know you only owe 3 on that, so it was a 30% ratio that you owed compared to the 10,000. But now you're 3 out of 4, 75% if it goes down to 4,000. So your credit utilization goes through the roof, and that trickles an even lower credit score. So let's learn about credit scores. Now, full disclaimer, I want to let you know that this is not overnight. So if you're currently shopping for a home, you're not going to be able to qualify for a much better interest rate tomorrow just because you're watching this video and you implement 100% of everything I'm talking about. This process takes time. So if you're thinking about buying a home, if you're thinking about getting a car loan or anything else in general, just realize that this is minimum weeks out, most likely months out. So if you can just implement as much as possible, as soon as possible, then you're going to start seeing those results a lot sooner. So to get started, we need to access our credit reports. And there's a few places that you can go and get your actual credit report. I'm not talking about your FICO score. I'm not talking about your Vantage score. You want to dive deeper than that and really see what's on your report. So the best resource to see what's on it is to go to the federally mandated free credit report, which is found on annualcreditreport.com. So the federal government about 10 years back passed a law that basically says, hey, TransUnion, hey, Equifax, hey, Experian, you need to provide the data that you're collecting again, about all of these citizens. You need to provide it once a year for free to them. So everything that's on your credit report, you can get on annualcreditreport.com. Now, if you see some website that tries to charge you $9.99 to get it, $29.99, anything $99, don't do it. It's just a business doing not related to the credit bureaus, right? So that's the best way. And what I do is I actually go in there once a year. I download all three, I print them out, and then I start highlighting everything that I can change. Right? Because I continually upgrade and improve my credit score. So the next thing is you can also go to Credit Karma, but you're not going to get all three. I think they do Equifax and TransUnion. So Credit Karma is a free app. You also go to creditkarma.com and you can go and put in all your information, and you can go in and see everything that's listed on your credit reports for 2 of the 3 bureaus, which is good, right? But you might as well start with annualcreditreport.com and try to get it from the direct source that's making and publishing. Another place that you can go to is Credit Sesame. Now, personally, I don't use them, but I do know that they're a really good service as well, and they're very similar to Credit Karma. So Credit Sesame gets a credit score, which I believe is a Vantage score, just like Credit Karma. It's not your official FICO score. The banks use your FICO score. And if you want to get your FICO score, you can pay for it. However, some credit cards, like for example, I have a Capital One card, and they gave me one of my free credit report FICO scores. Okay, so now you have printed out all of your credit reports. You start highlighting anything negative on it. And the biggest thing that really will impact your score is your payment history. Like I mentioned, 35%. You want to highlight that stuff. You want to see how far ago was that? How long ago was that? Bad news. It will stay on for 7 years. Now, can you do something about that? Maybe. If it's in error, definitely. But just note that in 7 years, it's going to drop off and your credit score will increase. However, that doesn't mean you're doomed for the next 7 years or 6 years or whatever you have left. You have to look at it in terms of how does a bank look at it? And in this case, how does a credit bureau look at it? If you defaulted 1 month ago, then you are a higher risk than someone who defaulted 6 years and 11 months ago, right? If I was to be lending money to somebody, I would definitely say, have you been late in the last month? Or have you been late in the last 7 years? And if this person says 6 years and 11 months, and I have to pick between these two people, I know that he is a lower risk. So therefore, I'm going to give him a better interest rate on the money that I lend him. So let's say, indeed, you find that you have some late payments on your credit report. It's important to know that it is not necessarily that you've made a late payment. They actually give you a really long grace period. So here's what really happened. If you have a credit card and you've purchased something for $50 and you owe that money and the bill comes out on the 15th of the month, right? 15th, that's when your bill comes out and now they say pay. Well, it says it's due by, let's just say the 22nd. Now the 22nd is where the time starts ticking. And if you do not make a payment for 30 days from that time, then you will have a derogatory remark on your credit report. If you make a payment when the bill comes out, if you make a payment when the bill is due, or if you make a payment within 30 days after the bill is due, you're not going to have any derogatory remarks. So know that you really were very late if you have something like that. And then if you don't make another payment, if, like, let's just say the next bill comes out the next month on the 15th, and then it's due on the next 22nd, and then you let another 30 days go by, and you haven't made the payment from the last month, that's a 60-day late. And so on, 90-day late, 120-day late. After 120-day lates, they kind of stop dinging you, right? They will keep marking it as unpaid and calling it 120, but it's 120 plus, right? It's not exactly 120 days. So it's important that you do not start going that far. So if you just have one 30-day late, don't worry, it's not going to kill your credit score. If you have a whole bunch of 120 lates, well, that's probably affecting it drastically, right? So you want to make sure you're always paying the minimum payment. It doesn't mean you have to pay the whole thing off, just the minimum payment. If you can start today, the one thing you can do is start today, making your minimum payments on everything that is on your credit report. Super, super important. I cannot stress this enough. You want to bring your credit score up, do this. That's it. Do this. Hey, by the way, guys, if you would like to get 2 free stocks, all you have to do is go down, scroll down, click on my affiliate link for Webull.com or Robinhood. And all you have to do is sign up using my code and then deposit $100. It took me less than 15 minutes to do all of that. And I got 2 free stocks, one for signing up, one for depositing $100. Literally, you can withdraw your money right after that and you get to keep your stocks. Some of those stocks are worth up to $1,400. It's worth it. Click. Now, usually the minimum that you owe is the small little fraction of the large amount that you actually owe. So let's just say you have a $300 bill and the minimum payment is $25, pay $25. You have 30 days to pay $25. If you cannot come up with $25 in 30 days, I'm going to say you're not trying. In fact, I'm going to say you gave up. You haven't even lifted your finger to try. It's only $25. You could literally go and mow your neighbor's yard for $25 in 1 hour. Sorry, got a little passionate about that one. I just feel it's really easy to get the minimum payment due on all of your accounts. No matter how many you have, it's really not that much work. So aside from paying the minimum amount, what can you do right now to help get your score up? Here's a really simple one. Call the creditor. That's it. Call, let's just say you have a Best Buy credit card, right? So you call that Best Buy credit card and you say, hey guys, be nice. Hey guys, I am really sorry. I've made some late payments. I commit to really making all my payments on time. I do have a small request. Would you be able to remove my derogatory remarks on my credit report? Now, if you're sincere and kind to the other person and understanding and not aggressive and mean, you don't know if you're going to get a very nice person on the other line. You just might. So if you make a call and they say, no, anything else, don't get discouraged. Hang up, call back. They say no, hang up, call back. Your persistence will lead you to success. I can tell you that from personal experience as a real estate agent, that persistence in calling and calling and calling and calling, following up with people, gets the job done. That's what separates the successful people from the unsuccessful people in sales. And in this case, you are selling your story to the other side. That's all you're doing. So if you can commit to 30 minutes of calling and just asking nicely over and over and over, I'm willing to bet you're going to get at least one person to go and say, you know what, sir? You know what, ma'am? Yes, I think we can remove that. I see that you've been making payments for the last month and a half on time, and let me check with my manager. Hey, get somewhere. Doesn't hurt to ask. Now, the last thing that you can do on your late payments, after you have started making the minimum payment, and after you have called numerous times and asked, I would recommend call each creditor 50 times in 1 week. Honestly, I'm not joking. Just try it. You'd be surprised. If you want your credit score up, do the work, okay? After you've tried these two, what can you really do that will help increase your credit score as fast as possible? So that answer is file a dispute. Now you're saying, but there's nothing to dispute. These are the actual facts. I was 120 days late 3 years ago for 4 months straight, and it's all being reported. Well, okay, I'm not saying you didn't do that. That's up to you. However, what you might want to consider doing is filing a dispute in hopes that they don't get to address your dispute. So what do I mean by that? Well, every month a whole bunch of people click dispute, 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 and then those get sent over automatically to the creditor. And they have to actually prove your debt, right? So what they do is through the electronic system they use, they go and dispute and they show all the evidence. They show that you didn't pay, they show the bill that came, they show this, they show that, they provide data. If that person that's working at the bureau is having a bad day, is lazy, called in sick, whatever happens, they only have 30 days to answer. Or if there's a huge influx of people who are disputing and there's only this many employees working on it, it's possible, and you might be the possibility, that they will not get to your file. And if they don't answer within 30 days, you win. So, dispute anything that is wrong and dispute anything that could be wrong. Because frankly, I don't remember if I was 30 days late 5.5 years ago on something. Do you? So either way, it doesn't hurt to dispute it, right? And the disputes you can do on a regular basis. Now, I'm not saying dispute it every single month, but I am saying if you are really on a mission to get your credit score past that 800 level, dispute certain cards maybe every 4 months, 5 months, 6 months, right? You just never know, and you might get lucky. So the creditor acquires your debt on, pennies on the dollar, probably 10, 15 cents for every dollar that you owe. So a $10,000 debt, they might get for $1,000 or $1,500, right? And you still owe them $10,000. And what your credit report is going to show is first your Best Buy debt that you had, and that was, on time, and then 30, 60, 90, 120, 120 closed, if they close it that quickly, right? And that is now a closed derogatory account. And then there's the new creditor, which is a collection agency. They're not actually giving you credit, but they're assuming the credit. And they're going to start reporting on your credit report. So what's important for you is that if it gets to the collection agency, you make a deal. That's what's important. Now, if you don't have $10,000, that's okay. You can usually negotiate those down quite a lot. And on credit cards, I would probably try about, 25 cents on the dollar. So I would call them and I would say, hey, collection agency, I'm debtor ABC and I have a debt with you for $10,000 and I have a goal to give you money today. Would you like to talk to me? And they're going to be very happy to talk to you because most people they talk to are not very happy. And then I would try to negotiate that $10,000 to the lowest possible amount. But don't just accept that lowest possible amount. What you want to do is you want to say, in exchange for me paying that off, I need you to take it off my credit report. But stick that in at the very end. First, get the numbers. Right? First, negotiate all your numbers. So you say, hey, I'm willing to pay $1,500 on my $10,000 debt. Are you willing to accept it if I mail it in within 14 days? And they may say yes. Or they may counteroffer and they may say, no, we want $3,000. And you say $3,000, okay, how about $2,500? I can do that. I literally have it right now and I can pay you. And if they accept, great. Say, how do I mail it? How do I get the money to you? What's the best way? Can I do a bank transfer? Get it done immediately. And then, before you pay them, say, okay, great, we've settled on $2,500. Now, please, would you mind removing your whole reporting history off of my credit report, please? Because if you don't get that removed, then you have collections on your credit report, and that does not help you. So make sure to get that part. It's very important. Now, what else can you do with collections? Another thing you can do is very easy, dispute it. And why would you want to dispute this? One of the reasons is because when there's a transfer of data from a creditor to a collections agency, sometimes their systems don't talk very well and some of the data doesn't get transferred over. So if you dispute it, then they have 30 days to prove to the credit bureau that indeed you owe them money. If they don't have the data, it'll be removed off of your credit report, and then you don't need to worry about it anymore. Now, if all else fails, all right, one thing that you can do here is you can go and actually pay off the collection agency in full. Now, why would you want to do this? First of all, the collection is going to stay on your credit report. However, the benefit that you're going to have is that after you've paid off that $10,000, you can do a dispute. And why would you want to do this? Well, the thing is that these are derogatory remarks on your credit report. And the collection agency has absolutely no motivation to reply to the credit bureau. There's no reason. They have no hold on you anymore. You've paid them off. There's no point in them uploading documents and spending valuable, assistant time to actually prove the debt. So many times what happens after a creditor has been paid off, after a debt collector has been paid off, is that they won't reply, and actually that will come off of your credit report. So you've settled it, that helps your credit report, but then you can try to dispute it, which will take it off, and even though you've settled it, it is much better to not even have it there in the first place. So that's another thing that you can do with debt collection agencies. Okay, if you're enjoying this video, please smash the like button. This really helps the YouTube algorithm know that this is valuable content. It helps me out. So please click that like button, subscribe, ask for the notification bell to alert you every time I put out a new video. Okay, so now the next big chunk, 30% of your entire credit score, is based on how much you owe. And I don't mean just dollar amount how much you owe. It's actually simpler than that. It's a percentage of the amount you owe. So this is really interesting because if you have just one credit card for $10,000 and you owe $10,000, then you owe 100% of how much was entrusted into you, right? And that's a very bad number. Now, if you have 10 credit cards at $10,000 each and you owe that same $10,000, you are at 10%. And that's a very, very good thing. So let's dive in a little deeper about amount owed on your credit report. When we're looking at our credit utilization, what we're really looking at is how much money are we using in relation to how much money is available for us to use. So as an example, if you have only one credit card and it's for $10,000 and you are using $10,000, that means that you are using 100% of the credit limit. Right? But if you have 10 credit cards at $10,000 each and you're using that same $10,000, then you are at only 10%, which is a very, very good thing for your credit report. So what you want to actually look at on your credit report is all the credit cards that you have, plus your home equity line of credit, plus any personal loans that you have, all reported on your credit report. Add them all up, and this is generally what accounts to as revolving credit. Now, add all those sums up, and if you have $100,000 available, you want to keep how much you owe every single month at under 10%, hopefully under 9%. Now, what are the magic numbers? Basically, under 10%. If you have, 15, 20, 30, 40, 50, it all makes a difference. As you go up with that percentage, then your credit score goes down. And I had a personal experience when one month I put all these different things on my credit card and my credit utilization went up to about 60%. And then the next month I paid everything off and I went down to zero again. And my credit score literally shot down and went right back up. So it's very important that you're actually counting the ratios, not just the dollar amount. You may think that the person that owes $1,000 is going to be better off than the person that owes $10,000, but that's not true at all. It's all about the ratio. So if the $1,000 person has a $1,000 limit, he's at 100%. And the $10,000 guy has $100,000 to use, then he's at 10%, and he's actually going to have a better credit score, even though he owes 10 times as much as this guy. So what can you do about improving your credit utilization ratio? First thing is, and it's odd for me to say this, is go get more credit cards. Because really, I'm not a fan of credit cards. I understand they serve a purpose in our society. And the purpose is to play the game of credit, right? That's my viewpoint on it. So when you go and get a credit card, that doesn't mean you go and use your credit card. No, I'm just saying open one up. That's all. So now you have $1,000 that you owe on a $1,000 credit card, and you get another card for $500. All of a sudden, your ratio drops to 66%, which is still horrible. But, at least it's better than 100%. So maybe you can open some credit cards. And if you get denied on every single credit card, go to Sears, go to JCPenney, go to these big department stores and get a department store card. It won't have the little Visa or MasterCard logo on it, but it is something that's going to get reported onto your credit report. So just by opening more credit, then that is going to help your ratio. Now, one thing is, you have to be responsible, okay? This is not a game that you play if you haven't built the self-discipline. This whole game of credit is about discipline. So if you are not disciplined, you may want to consider doing something to get disciplined, right? Not by testing yourself with credit cards, new credit cards, but maybe do something else, like get up every day at 6 a.m. if you usually get up at 7:30, and get disciplined in doing it. And discipline is just a mental fight with yourself, right? Where one side of you says, oh, I want to snooze, I don't want to do it. And the other side says, shut up, get up. You said you'd do it, be true to your word and go do it. So you want to build inner discipline, and you can do it in other ways other than risking your whole credit score. So that's another thing you can do. They say it takes 28 days to build a habit. Well, maybe if you take 28 days to wake up early, or 28 days to start and drink 2 glasses of water when you wake up, or maybe 28 days of not using your credit card on anything, maybe that's a good start, right? But build your discipline, because I don't take opening credit lightly. Opening credit is something that you can use as a tool, but don't let yourself be the tool. The card is the tool. You don't be the tool. All right, so now what else can we do to improve that ratio? Another thing that you can do is just call your existing bank, even if you're at 100% credit utilization. Call the bank and just tell them, hey, I was wondering, can I get a increased credit line? Can you increase my credit line for this card that I'm already using and paying my minimum balance? It's only going to make you guys more money. Tell them whatever you want to tell them. One thing they might ask is, well, have you had a change of income? Because this actually does directly affect how much they're going to lend you. So if you've made $20,000 and they gave you this $1,000 card 5 years ago, but now you're at $28,000 per year earnings, they might actually increase your credit score just because of that. Also, it's best to ask for that right before the holiday shopping season of Christmas and New Year, right? Because at that point in time, that's when everyone uses their cards and they're more willing to give people more credit. Just don't use it. That's all. Don't use it. Be disciplined. Okay, so that's the second way that you could better that ratio, where you have $1,000 owed, and now this $1,000 card gives you an extra $500, and you also open this other card for an extra $500. Now you're at a 50% credit utilization ratio, which will definitely, 100% sure, improve your credit score with the credit bureaus. So let's go down to the next level, which is 15% of your entire credit score is determined by the length of your credit history. Now, this isn't truly what it sounds like. It sounds like, well, I'm 68, I have had credit since I was 18, I have 50 years of credit, and therefore I have a very long credit history. No, it's about the active accounts on your credit history. So for example, if you had a credit card that you got when you were in college, let's say, and you were 18 years old, you got a credit card, you didn't pay for a while, whatever, it's derogatory remarks, all that jazz that happens usually when you're 18. And then, you're 25 now, and you say, you know what, I'm going to close that card. Well, you just did yourself a major disservice. Even if you owe that $1,000 or what, maxed it out or whatever, that's a really bad move, because what happens is now your length of credit history, which is only 15% of your whole credit score, but it's still 15%, Who doesn't want free 15% just by keeping your card open? So if you're considering closing your cards, think twice. What is the purpose? Aside from maybe self-discipline, which is more of a problem in here, maybe that's the only reason that you might actually be thinking to closing it. However, when you're looking at the whole spectrum of the length of your credit history, it's only about the active accounts on your credit report. So if you have a card from that's 7 years old in this example, you want to keep it open. Even if it's maxed out, even if you don't use it, even if you lost the card, you just want to keep it open, right? And if they send you a letter, just like recently, I got a letter that my Discover card was going to be closed because I'm not using it, and I don't use it. I don't use my credit cards unless I have to. So they sent me a letter. They said, unless I make a purchase. Well, guess what? I just filled up gas in my car. Bam, done. They didn't close my account. So now I get to keep my Discover card, which I've had for many, many years. So you always want to keep the oldest credit available to you, right? You don't want to close those accounts. Another great example to build a long-term credit length history is mortgages. So this is interesting because a lot of people, when they go buy a house, they have to sell their existing house. I deal with this as a real estate agent all the time, where people have to sell to get the equity out of it, and then they can put a big down payment on their next house and move on. Well, you'd be surprised. Sometimes you can work other tricks to keep that account open, right? And by having that account open, what you're going to keep is a very long credit history. What if you've owned this house for 10 years and you've been living there and your family outgrew it? You now have 3 kids. When you bought it, you had 0 kids. 2 bedroom, 1 bath. Everyone's kind of crammed in this little house and you need something bigger. You truly need something bigger. So now you want to go into this house. Well, there are other ways than selling and putting a down payment. You can do a refi. That's a different topic, right? But basically what I'm saying is keep this account open at all costs. If you really can keep it open, and then rent it, hire a property manager, do something else, right? Or maybe rent it for 1 year, then sell it. Keeping it open is going to give you a great credit score for this loan right here. Now, there's not much that you can do about improving that except for time going on. And if you only have 1 credit card for 10 years, you might want to consider opening a second one. What it's going to do is going to temporarily lower your score because now you have a 5-year average history. Before you had 1 credit card, that's your only thing on your credit report. 10 years you've had it, so you have a 10-year credit history. And now you open the second card, and that's 0 months old, and they average it out, right? They add both of these things up and average it out, and that's 5 years. So now your average length of credit history is lower. However, what you want to do is if you have 5 or 6 cards opened up, and you can keep them open for 5, 6, 7, 8 years, hopefully over 10 years, that they really like to see over 10, which is why mortgages are such a good way to do it. If you have it open for a long time, then anything else that you do in the future won't really be affected if one of these cards goes out of business and they close the card for you, or for some other reason they decide to close it, or you accidentally close it or something. It's not going to really impact you as much, right? So keep your credit history open for as long as you can, for as long as it makes sense. And really, if you're trying to get to that 800, 850 credit score, which I've personally never been to, I've been over 800, but never been that 850, you really have to keep them open for a very long time. Okay, so now the last 2 points that affect your credit score are 10% for your new credit and 10% for the types of credit that you have, which means the diversity of the credit, right? So really, this is 20%. You should be focusing on the 80%, really the 35 and the 30. However, when you're looking at these last 2 points, the new credit, there's not much you can do about that. You do want to have some new credit established, like you just always want to be building your credit. But what's more important that you actually can control is the types of credit used. So you want to have a mortgage, you want to have a car loan, you want to have credit cards, you want to have a personal loan, whatever you can get. I mean, to get the max score, you want to do that. Now, personally, I don't have a car loan, right? I will have a car loan. I know I'm going to be buying a car relatively soon, so I am going to go into a car loan which is probably going to help my credit score. But you don't need to have all of these to have an 800 credit score. I have a great history. I have 150 something months of on-time payments. Excellent history with that. And I have mortgages because I'm a real estate investor. But I don't have a car loan. I don't have a personal line of credit. I don't have a home equity line of credit. I don't have anything really. I just have credit cards that I don't really use. And if I do use them, I pay them off. And then I have mortgages that I pay every single month. So really, with just those components, you can have a really, really good credit score. Okay, so here's the bonus section. If you're liking this video, please click the like button. If you have any questions, please write a little comment. I will answer all comments and questions personally. So the next little part that I want to talk about is about bankruptcy and foreclosures, deed in lieu of foreclosures, or short sales. And how does this affect your credit score? So they're really actually all similar animals here. First of all, if you have a bankruptcy or any one of these types of foreclosures, it's going to stay on your credit report between 7 and 10 years. And what can you do? Well, there's really not much. One thing, though, that you can do is possibly there might be some sort of filing errors. And if that's the case, then you should dispute that. And there is a small, very slim possibility that it will come off your credit report and your score will increase drastically. Also, bankruptcies don't necessarily kill your credit score. What they do is they reset everything. So therefore, your credit history is very short. Also, a lot of loans you will not be able to qualify for because if you have a bankruptcy, for example, in real estate on a conventional loan, if you have a bankruptcy on your record, then you have to wait, a certain amount of years. And I do believe that just a regular Fannie Mae, Freddie Mac loan is going to be a minimum of 7 years, and an FHA loan is going to be 4 years. I do believe that. I'm not exactly sure. Double check with your favorite lender. Now, foreclosures are very, very similar to that. If you have a foreclosure and you're trying to go for a loan of the same type, which is a real estate home loan, then you're probably not going to get it unless you let all those years go by. Now, filing errors is one thing that you can do. And another thing is that if it stays on your report for more than 7 to 10 years, which in some mistakes, do happen, this could actually be true, then you want to go and dispute that for sure. So, the last thing that you can really do about the foreclosures or the deed in lieu of foreclosures or the short sales is that if that lender is no longer in business, for example, Countrywide had a whole bunch of foreclosures and I don't believe Countrywide's in business anymore, then you definitely want to go and dispute that because there's no one handling all of those disputes. So if you dispute it and no one answers in 30 days, it will come off your thing. So everyone, if you have a lender that is no longer in business, dispute it. And you probably have a very good chance of it coming off your report. So as you can see, you don't need to pay any credit repair company to do any of the repairing for you. It's just a matter of putting in a little bit of time every single day, and within 30 days you can get your credit score to be much, much higher. Now, if you like this video, please click the like button, please subscribe to the channel, please click the notification bell, and you will be notified every time I put out a video. So if you have any questions, please drop a comment below. I will reply, and hope you have a great day.